The regulatory is playing a very important role for the bringing the investments in the AIFs, the industry. The regulatory uncertainty can make it difficult for the investor to understand the legal framework and make informed investment decisions. Have regulatory and bureaucratic hurdles increase LP's hesitancy in investing in the startups or the AIFs? And second question is, which industries have yielded or given the more return, the best return for LPs investing in startups, and what factors have contributed to this success?
I believe from the fund perspective, Mr. Dinesh and Sunil, who are the legend in this industry, have speak in detail about this. So we are a very young fund. So I launched this fund in June 2021, and on 31st May we have completed our 2 years. And we invest at pre-series A, early stage investment, but our fund thesis is that we only invest in direct to consumer brands. So I'm a guy who's known as a D2C guy in India, and we are one of them who invest at very early stage, not at even Series A level. So our fund is 50 CR crore. And the good part of our fund is that there are 36 LPs who are contributing 50 crore. Our call for money is separate, means we are calling for money over 4 years. So we are very slow in investing. Till now, we have deployed 25 CR out of 250 crore rupees, make 9 investment, and 36 investors, all are individuals. There is no institutional capital, no corporate, nothing like that. All are CXOs of large companies or the startups. And 80% of them are those who are the first time investor. They have not made any investment prior to this fund. So you can understand from the SEBI perspective, when I sent them the public placement memorandum, which is the Bible of our fund, which everyone had to read, and the contribution agreement, which is 100-pager agreement. And when they have to read it, so I normally say that in case someone will read that, he will never invest. It means everything negative is written over there. Nothing is positive mentioned there. However, SEBI is also right, because they have to cover all the points. So it is very difficult for individual investor to invest in a fund because of Indian legal framework. On the same side, the changes are happening very frequently from the SEBI side. Every week there are frequently circulars are coming where they are changing the things on the, and it is applicable on the fund which are already in there in existence. And when we go back to the LPs and say, okay, now SEBI is asking this document is also required. Now we require more documents. Be little bit upset and not very comfortable that why so much changes are happening, whether we are into the right fund or not. So that's how that increase their untrust on the funds, and they start looking for other asset class. So I strongly believe that in India, if there can be master circular by the SEBI, just like RBI, which can be published on the periodic basis, it can really help the fund manager as well and to the LPs as well, where they can learn about this asset class. They can see that these are the documents which are must, these are the processes we will have to follow, and it will increase the trust in the investing in the startup through funds as well. So I strongly believe that little bit improvement is required. It will definitely help the fund manager and this asset class to grow very well. And related to your second question, which is which sector is best, I believe there are many sectors which have given good kind of return. But again, the sector is not the criteria. Fund is the criteria, and fund thesis is the criteria. As Sunil rightly mentioned, that fund manager has played a significant role there. At what time you have to enter, and exit is extremely important for them. That because unless and until you will take a decision of exit on the right time, you will never be able to give the right kind of return to your investor. So there are many sectors which are good, but still fund manager failed to give the right kind of return to their investor. There are sectors which didn't perform as well, but still people have made right decision at the right time. And they make good money for their LPs. So it is all about fund manager perspective, that what is the fund thesis. And again, I will go with Sunil's thesis, that he should be stick about that. Whatever is the thesis, he should not be play around that. Okay, this is an opportunity. Now let's widen the scope of my fund or the thesis. In case you have decided that take an example, our fund thesis is very simple. We will invest at seed stage. We will again invest at Series A level, and we will take an exit at Series B level. So that is the simple philosophy of our fund. We will not take exit before that. We will not go beyond that in terms of investment. So fund manager will have to follow their thesis, and based on that, there is a return. There are benchmarking study available in the market. We can see that which funds are doing well, and based on that, people can take that.